I'm Matt Bouchard with NAREIT's REIT.com, here at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is Craig Macnab, the Chief Executive Officer of National Retail Properties. Craig, thanks so much for joining us.
Thanks very much. Good afternoon.
Now, based on your company's results for the third quarter, FFO this year is up roughly 8.5% from last year. What factors are driving your gains?
The biggest ingredient is we get our growth primarily through two things. Maintaining a very well-occupied portfolio. We're sitting right now at about 99% occupied. And that's both in terms of number of properties, but also by investments in the real estate. So obviously that's an important metric. With that, we in our portfolio get about 1.5% growth in rents per annum. So our external growth is the driver. Last year we bought just over $600 million of real estate. This year we're getting all of the rent from that. That number, we've got about 90% of it drops down to the bottom line. This year so far we purchased just over $560 million of real estate. Next year should be another good year.
Now,
no forward-looking statements, though.
Now, picking up on that, obviously we saw a little bit of a feeding frenzy in net lease in the last couple of years. What's your take? What do you think the acquisition market's going to be like in 2016?
There's no doubt about it. There was a little feeding frenzy, and a couple of folks were very hungry. But the good news is they appear to be out of the market right now. So our pipeline is good. The market, the pricing is going to be a little more rational. And I think the environment's good for all of us that are still in the game.
Now, what broader economic indicators do you particularly keep your eye on?
Well, I think the starting point is that the rising tide is probably not going to lift the boat the way it has in the last couple of years. But I like the line that I think Brian Westbury at first somebody says, it's a plow horse economy. So what are we looking at? We're obviously looking at retail sales. It impacts us. I think Christmas is going to be okay, probably 3 to 4% growth. Whether we like it or not, in this great country, we all consume a little more than we could. So we pay a lot of attention to retail sales. And then, I think interest rates have got everybody anxious. My personal opinion, it'd be wonderful if the Fed raised interest rates and we stopped talking about it, and then we can stabilize and enjoy a good, solid 2016.
Craig, thank you so much for joining us.
Thanks for having us. Thank you. Appreciate what you guys do.
For more from REITWorld 2015, be sure to visit REIT.com.